This week, we saw business optimism stay steady, but business health start to decline. We also saw consumer credit drastically slow down, a torn Fed committee with their meeting notes. We saw confusing initial jobless claim numbers and controversy within the U.S. federal budget. Stay tuned for this week's recap, July 7th to July 11th. My name is Jay Rios for Rivers Realty. Let's start with Tuesday, July 8th, when we got the Optimism Index. The Small Business Optimism Index did stay steady for last month, June, and inventory was a big factor in this report. So what does inventory have to do with any of this? Well, when businesses are overstocked, it costs a lot of money. They have to pay initially for the materials or goods themselves, principally, and then they also have to pay for holding costs, tying up of said capital, maybe interest with that, and risk of spoilage or obsolescence. If business owners think they're overstocked, their optimism for the future will fall because they don't believe there's enough supplies or that they have too much on hand. At this point, the net or difference between the business owners who think they have too much and they don't think they have enough is that most people think they have too much. And it's probably because of the tariffs, I'm sure a lot of business owners probably piled on a lot of the inventory in anticipation of them implementing. Fewer business owners reported labor as their biggest problem, which really aligned to what we talked about last week, and indication of a potential cooling labor market. The single biggest problem for small business owners, month over month, is taxes. And this actually increased, so more business owners are now worried about this than they were the month before. What might be most interesting is that the data on the respondents' businesses' health showed pretty substantial deterioration. 6% fewer people reported their business was excellent. 50% reported that their business was good, which is another 6% lower than the month before. And the rest were poor or fine. Consumer credit rose, of course, as it always does, but at an incredibly slower pace than the month before, like 50% less than the month before. What could this mean? Well, maybe that consumers are becoming more cautious of borrowing, maybe due to interest rates, job security, or less optimism in the future. And consumer confidence is actually dropping according to the conference board. I think at this point, a lot of people were hoping for an interest rate cut, but the Fed has remained very steady on keeping it the same and just waiting out this fog, so to speak, to see what the future holds. Mind you, national GDP is 70% made up of consumer spending. So if there's a slowdown in consumer spending, you might expect the same from our GDP. Now, of course, there are other factors contributing to this. It's not just about what people spend on credit. That being said, if consumers are spending less, that means demand is decreasing, which means prices can't increase as fast, which means inflation won't be as bad. So the Federal Reserve will really be looking at this to see how people are spending and if their fear of inflation is as accurate or as possible as it was before. Speaking about the Fed, on Wednesday, we got their notes or their minutes from the June meeting they had last month. They kept the interest rate the same. We already know that. But the committee seems really split here between whether inflation and tariffs are temporary or are more so here to stay. And really, aren't we all, including probably the president himself, as he has gone back on tariffs and implemented more on Wednesday. There are some who want to cut rates as early as next month, and others who want to wait. The majority want to wait to see what the data tells them. Now, they made some expectations, and of course, again, this is in June. So this is the full we just talked about with consumer spending and GDP, but they had already revised their GDP expectations lower, as well as higher inflation and higher unemployment. So these are all adjusted expectations from the Fed in 2025. All right, now Thursday, we got some jobless claims numbers. I know we mentioned last week that there's some confusion in the labor market, but it's a good indication when you start seeing initial jobless claims drop to a 6-week low. However, don't get confused because the big picture here is that continuous jobless claims rose and are at a pretty all-time high as November of 2021. And this is before we start seeing layoffs from Microsoft and Intel, which have been announced, but hasn't really been seen in the data yet. And who knows, maybe this is a shift in tech more to AI. Microsoft, for example, has 30% of their code already being written by artificial intelligence. And now Friday, June 11th, the day we're recording this, we got to look into the U.S. federal budget. The good news is that the U.S. deficit is decreasing. The bad news is the method in which to do so. Receipts or payments to the government minus expenditures or outlays, as they're called, equals the surplus or the deficit. For June, it was overall positive. There was a surplus. So receipts outnumbered expenditures. And that's mostly thanks to individual income tax. The single biggest problem for small business owners, month over month, is taxes. Outlays or expenditures consist of payments to US citizens, global purchasers of bonds, for example, Social Security, Medicare, and health programs. And this is where it gets bad. The Trump administration adjusted the budget to cut $1.1 trillion with a T, in healthcare spending over the next 10 years. So less funding and possible higher premiums. This is disproportionately and undoubtedly going to affect the lower class who depend on the support of all of these programs and can only afford so much. Affordable healthcare, food stamps, housing assistance, and much more for millions and tens of millions of Americans. Ouch, this is going to really hurt. So again, good from a broader perspective, the deficit is lowering. We want to owe less, we want to have to pay less. But the way we're doing it is unethical and going to lead to chaos. And that was this past week, July 7th to July 11th. Thank you so much for watching till the end. If you like the content, like, subscribe, comments. Looking forward to next week. See you guys then.